Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Close your eyes if you're under 18.
It's my chance to show boobs.
Live by fantasy. 'Cause tomorrow morning we won't remember a thing. Our lives are awful and dreary. So tonight we're going way, 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 way too far. Hide your kisses cannot be unseen.
I guess you guys aren't ready for that yet.
Hi guys, welcome back to the channel. For those of you who are new to the channel, this is the Greedy Trader channel where we talk about all things market profile, but not just that. We talk about market profile in the context of things like understanding the liquidity that is out there. We talk about market profile in the context of understanding Wyckofian logic. We talk about it in the context of understanding volume. So what we do here is bring a more holistic approach to understanding the markets, and that's the important thing. Now, there's so much stuff out there, absolutely agreed, that is talking about a load of stuff that is just not true. And here we're going to expose that. For those of you who've been following me for a while, you know this is just another video. Now, I'm going to treat this like a lesson, right? Now, for those of you who don't know, also, you can see my free mentorship program, which is right here on YouTube, right? So basically, one of the things that I've said I was going to do was put every single piece of information that I know of the past 15 years of being in investments from a professional standpoint, in the institutional world and also the retail world. One of my missions has been to make that information available to everyone, right? I personally, for people who followed me all the way back from reasonably 2012, you know, when people actually found out, you know, about me. But I've been in the business since 2008, right? When a lot of people decided that they were going to get into markets. It was actually around about then that I started my career in markets, weirdly enough. And it's what has brought me here. Now, of course, I've always been interested in this sphere ever since I was young. Very, very young, in my teens, but you know, I'm really grateful that I actually got the opportunity to participate despite coming from a wildly different background. You know, for those of you who know my story, you know, I came all the way from the consultant background into this. And, you know, sorry, and when I say consultant background, you know, like a lot of you guys in the US, this is great stuff, but you know, I live in England, you know. This is not so great. It wasn't so great in the UK. It was, you know, it was a job, fairly well paid, but it wasn't great.
Yeah, no shit, Sherlock.
Whilst, you know, some people might be excited about consulting if they were in the United States, for example. So again, the things that drew me into the financial space was to kind of free myself from all the additional obligation of having to participate in society in a specific way. But anyway, that's just a rant at this stage, so I'm not going to get into that. But for those of you who know my story, you know that I'm just like everybody else, and I kind of built myself in this business. So I came into the institutional world with knowledge of investments, and I had to kind of relearn a lot of what I knew. And, you know, just to be clear on this, you know, people in, you know, our version of Wall Street, they're not the smartest. You know, I found I knew a lot more than a lot of people when I came in, but what the benefit I got was I was introduced to certain ideas and concepts that I was able to understand and expand on. And that's what brings me to this juncture. Anyway, so I'm going to treat this like a lesson, right? And like I said, I said all of that just to make you aware that I know what I'm talking about. right? And if you go to my mentorship program, I'm big on proof. So one of the things that I was able to show everyone is what my performance is and how I achieve this. And that's what I'm teaching here, right? Nothing else. And, you know, for again, those of you think, oh, there's another person teaching for ulterior motives. And, well, you can just look around my YouTube channel. I mean, barely anybody finds it. I've got less than 10,000 subscribers. So, you know, this is not paying the bills for me. In any case, I think it's important to share knowledge, share information when you have it, so that we can ultimately live in a better world. There is just so much information overload, information crap, and on this channel, you're going to get all that stuff exposed.
Once someone is exposed, they're at your mercy.
Alright, so let's talk about market profile. So again, I'm going to treat this like a lesson. So, quick intro to what we're going to talk about. So, in my previous videos, I've said this time and time again, most people are scared, or when they see a chart like this, like they think, what the hell is this? I've never seen this before. But don't panic. There's a ton of content on this channel on exactly what market profile is. So, you know, you don't even have to click off. You don't have to go anywhere. You can learn all about it right here. So don't panic, right? You're going to soon get the gist of it. And if you, of course, if you don't, you know, and you feel like it's too much for you, then, you know, you can always walk away. You know, well, I'm fine. You know, in the end, you know, everyone's on their journey. You learn what you learn. You don't learn what you don't learn. You know, that's the reality of life. Moving on. So, for guys who remember, this is a chart of crude oil. Now, I really wanted to talk about, in this lesson, I want to talk about, and I'm going to add this, by the way, to the mentorship program, right? Because I wanted to have a very, 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 very quick chat on, you know, what we're seeing here right now, right? So what's going on in this chart? And I'm going to bring all the concepts into play. So this is today, right? Crude oil, MLK Day, right? There's no real trading here, which is why I'm choosing this day to do this video, because I think whilst the markets are active, it's MLK Day. Some markets are closed, right? So the equity markets are closed. So while the futures are working, the equities are closed, right? So you're not going to get the same kind of flow as if when we have a normal day. So let's get into the nitty gritty. Now, we always talk about liquidity, right? That's one of the first concepts. So if I split my profile, the last profile, which I didn't split, this one here, right? So you can see that at the top of the range, right? So you can see, and this is the benefit, right? When you're working with market profiles, some of the things you can't see, right? Some of the things you can see, it's the things you can't see are very few, basically. And the things you can see are like numerous. And this is the reason why I don't like using candlestick charts. Yes, I don't. I can hear everyone thinking. That's what everybody uses. But I don't like using them. However, they are colorful, they are gamified. People love using them because they add a gamification element to them. I mean, you know, it's just boring looking at stuff like this. I mean, it's almost like there's no movement. There is, you can see it here, you know, right hand side of the chart, but it's not driving your anxiety, right? Your ticker's moving, but these are TPO charts, so it's not driving your anxiety. However, if I was looking at the candlesticks chart, there's a lot of changing colors, you know, it's like a light show. And for that reason, it is gamified. And you just want to keep clicking buttons. You just can't get your analysis straight. It's almost like you don't know what you're seeing. And there is not enough information in a candlestick. We're going to talk about that. Anyway, so what can I see? Back to the lesson. What can I see? I can see here, offers stacked, right? So what do I mean by that? It means there is a lot of interest, and we can see that based on the shape of the profile, that there was a lot of people that were interested in this price level, and we can tell by the offers that are stacked here. So let's make that clearer, right? So we can see somewhere between 74.7 and 74.27 as per this particular chart, right, which is a CFD of crude oil, is saying that this level was a strong level, and it was likely we're going to see some short interest there, right? Well, we saw short interest here. So again, if we split another profile, right, we can see that there was short interest there when we touched out a K period, and that drove us down. and then we can see there was short interest there again, and that drove us even lower, and so on, right? So these areas, like I call offers stacked, that's what I call them, offers stacked, right? So there's a passive orders potentially in the book that we've seen a huge aggressive move coming out of those that particular offer stack, and what that does is it gives you a point of reference. So we can see this in profile. You can't see this on a candlestick chart. I mean, you don't believe me? I can pull up a candlestick chart of the same thing. These are daily profiles with 1 hour rotations, right? So think of, when I split them, think of them as like a 1 hour candlestick chart, right? When I condense them, they become a daily chart, right? So that's what we're looking at. Now I can see this daily bar, or let's say daily profile, right? You notice I'm using them interchangeably. Daily bar, daily profile, right? So when we can see that daily profile, we can also see what goes on inside of those daily profiles. As for the untrained eye, this just looks like open, close, a bit of a tail on the bar and a tail on top, but we don't really know. This was a sell-off on this day, but we don't really know what was taking place in there. So you get a completely different perspective when you're looking at a profile chart. Okay, so you can see more. That's my point. So you can clearly see offers stacked, rolling out, right? We can see we retested that level several times and we were unable to break it, right? So clearly it's a pretty strong level. But what does that also tell you? So above these areas, so these points, and we've said this before, there's liquidity. Why is there liquidity? Well, that's where the stops are going to be, right? So if someone is short, they're going to have buy stops here, and if someone wants to get long, they are more than likely to get long here. If you're market making, you want to force margin calls, so you want to force people out of trades, you're going to be able to do it above these kind of levels, right? And that's because if someone accidentally got short here, I say accidentally, but a lot of people get short down at these deep levels, and if you follow my programs, you'd realize why you don't want to be short in these levels, regardless of the price action that you're seeing.
I knew it. I'm surrounded by assholes.
So you can see it's obvious. So if you were short here, the furthest you're going to be able to stick a stop loss, right, where it's going to make financial sense to you, is probably going to be at the K period high, right? And let's say you're that kind of guy, it's like, I need to give this wiggle room, instead of accepting that you just got into the worst possible position. But you might want to give it wiggle room, so give it some wiggle room.
Gentlemen! I'm bulletproof.
You're dead.
Sorry about your window!
Right, so not a big deal. You give it some wiggle room. Right, so let's say you are that kind of a guy who's giving it some wiggle room. Well, depending on how much money you have, you know, this is the last place I think reasonably you're going to be able to stick a stop before you start thinking that I don't know what this market is going to do next. And that means it becomes a great forcing point to liquidate people. So what happens when we take a buy order and we liquidate it, right? It becomes a sell order. So if we are short here, we've got buy stops here, and then, you know, the market runs into this level and triggers those stops, then people essentially are forced to buy back their shorts, right? And that means that sellers are going to have the opportunity to sell to them in order for them to execute that buyback at the highest possible price. And that's how they become losers, because they were short here and they've had to cover more expensive prices, and that means they have to buy at the highest prices. It's pretty simple, right? This is just, you know, it's not a lot to think about. So seeing that we understand this, right, so it means we start to understand the concept of liquidity, because if a lot of liquidity can be created at this point, then the market is naturally going to either offer prices into these levels, or if we're talking about the downside, it's more likely to bid them lower, right? So we can see we traded above that liquidity, right, took it out, and then we sell lower, but there was something else. We can clearly see there was an offer stack there too. So it makes this area a really strong area, high probability area to trade from, right? And you can see it's quite a deep low. So if we think about what's going on, so again, we'll split another profile, we can see that, well, this was the absolute low and this was the absolute high. So in relation to the difference between the high and the low, and if we think of this as the midpoint, sort of the average sort of prices, and this becomes the outliers, then this is also offers a very high prob, high risk reward style trade, right? And I want to use that word risk reward very sparingly, because I'm also aware that people misinterpret what we mean by risk reward, but I'm not going to get into that in this segment. But think about it, guys. If we are trading at the highest possible prices, let's say we're getting short up here, then we are putting ourselves in a really, really good trading position. So you can see that here, right? So we know that this is a strong level because of the offer stack. So the moment we went in Q period and then we started to back out, this becomes a natural level to be on the short side, right? Now, like I've always said to traders, you want to look to do this at a liquid session. Q period, R period is about 3 p.m. UK time, 5 p.m. in Europe, and that means in Chicago it's about 8 a.m. in the morning. Close enough too. And that means that most of the traders in the United States are going to be waking up, or they're going to be active in the market. So there's high liquidity at this point. So this becomes a high probability trade. Where do we want to apportion risk? Well, I want to make sure that I give it some wiggle room, right? This is what my wiggle room looks like. But anyway, why did I do that? Why would I want to stick my stops here as opposed to here? Well, there's a couple of reasons. If the liquidity gets traced out, then we got a gap in value which gets filled, right? And that's my stop gone, right? Because I'm forced to put a stop to do this risk reward thing, and I put it in here. Well, that stop is, I'm sure that's a buy stop, so someone else could hunt out my liquidity. I'm not the God's eye here. Right, so if my liquidity is going to go, then it would be more likely to go there. So let me stretch it a bit. So we might not be able to revisit new value, right? If I'm looking to be really risk averse, then I can push that above a value high, but that, for me, that wouldn't be necessary, right? So because I'm looking for the liquidity run, right? So now that I know that I'm kind of out of harm's way, trading the gap in value, I've avoided that trade. I'm also sitting above a huge offer stack, and I'm seeing the market cut back, and then we're closing off the day, coming in a new day. So this will be an Asian session. I have no idea what's going to happen then, but for me, we're getting close to the end of the day, and this becomes the only opportunity on the board. Where would I look to exit? Let's pull this a little lower. Well, then I'm looking for the next liquidity spot down here. So if we just pull this right down to the downside, then I'm looking to get out right here, right? Just when we drop below this sort of short-term liquidity, that's where I want to get out. Now, I don't necessarily know if I'm going to be able to trade down here. I don't know what the market's going to do. I don't have a crystal ball. So because I don't know that, I'm not going to risk it. I'm just going to basically get out as fast as I can at this level. I think I would have captured a lot of the move trading with those concepts, right? So that's the first thing. So I just wanted to run that explanation initially before we jump on to what is more current price action. So now we have some historical context of what's going on. So where's the next big offer stack? So the next big one is up here, right? So if we just single that out, right? So what we're going to do is put that here. So that's the next big one, right? So I'm going to pay attention to this really closely, right? Because that's where we're going to draw in sellers against a huge offer stack. Now, I also know we got liquidity here. We got, well, this liquidity here had been taken out, and we can tell, and now we've got liquidity coming here. And again, what have we got? So we can see there was a liquidity level here. We recovered I period, J period. What is J period? That is a major European period session. That is 8 a.m. in London, 10 a.m. in Europe. Great trading time. If you are in Europe, for the Americans, they would just call this after hours, right? So this is kind of an aftermarket type thing, right? So J period, we start to tick higher. We've clearly taken out some liquidity. We're covering in. We are doing a structural break. So these are where some of the other concepts you understand can come into play. We're doing a structural break above the Asian highs. So, well, it makes sense that we're going to ride this up to the sky. But then again, the nearest liquidity is here, which will be my obvious target. But also, I can see from this split rotation right here that this is probably going to be a dense liquidity area. So we're going to see a stack. And exactly as I thought, we have a small stack, a very small one. So we just want to stick that in here just so we can reference it. So instead, that becomes my target, right? So I'll be thinking, well, let me split this again since we don't need this anymore. There we go. So I'll be thinking that this will be my target area, or I could stay just under it, and this will be a great play coming into US session, right? Just in case there's additional volatility that I don't know is going to happen, that's where I would look to get out, right? So point in case. So again, let's say you didn't make that decision. Let's say you were looking at this level. Well, it didn't really matter, because in the end, we did actually trade up there and then take the liquidity, then move lower. Right, again, that's what we do here. Now, a lot of you would say, well, yeah, but it's in hindsight. You wouldn't have done that before. Well, look, we're going through the market right now. Where's a good exit point? Let's do the same analysis, right? So we're short. We expected the market to be short. Why? Because we traded up, traded above this major liquidity area, traded into this offer stack, and then retreated back in here. Now, you could have been short on end period. Look, if you're risk averse, you would get short on, the Q period takeout, and then you'd have to put your stop against the P period short-term liquidity. It's a riskier trade for me. I would have been a little bit more convicted, come in at end period and put my stops above M. It just makes things a little bit more secure. But what else can we see? We can clearly see there's a value high here. So it's a good place to put a stop, because even if we get a liquidity hunt, the chances that we're going to trade above the value high for the day was very low. So let's say, call a spade, I'll get short here. Where am I looking to cover? Just under here, right? So at this point in time, I'll be looking to get out of this trade on MLK Day, right? It makes sense. We're still pushing lower. Some traders will say, no, I'm going for the T period liquidity. That's what I call greed.
They offered me what I couldn't refuse. Money.
We don't want to do that. So now we're heading lower, right? We're still going lower. Let's say we didn't take any of these opportunities, right? We didn't see them, whatever, on a holiday. Girlfriend came around, wife wanted to make dinner, whatever it is, you weren't in this trade, right? Your next interest level becomes T period low. There's going to be some decent liquidity there. Most importantly, we can see from a reference perspective, let's condense this profile here, and let's condense this one here, right? This is going to give it, we have a bid stack down here, strong liquidity spot. So what are the chances the market is going to be able to take out that low and sustain the move? Well, we don't know. But in my opinion, it's pretty low. So this becomes an interesting area, but we don't want to trade this impulsively. We want to wait and see what it does. So I guess we're going to trade, probably take out the T period low. We're going to reverse, and then we're going to hold to consolidate. And that gives you a perfect opportunity to get long. And where would you be aiming for? Well, the I period high, because again, the long-term trend may be bearish.
Who is your daddy? Who's your daddy, Gary?
We don't know, right? When we're looking at a chart like this, the long-term trend could be bearish, and we want to bear that in mind, that if you slapped on a weekly profile or you slapped on a monthly profile, it may mean that we're going down long-term, which means that it makes sense. Any bullish reversals we get out as soon as we can. For me, that will be above 73.06, where we're likely to join the next selling interest if the longer term cycle remains bearish. This is how we think about things, right? So if you're a professional and you're trading technicals, you say now listen guys, not everybody in the professional space is a great technical trader. Not everyone. Some people are, some people aren't, but not everyone. So if you think you're a good technical trader in the institutional space, then this is how you're going to look at it. If you're not a good technical trader, then you're probably looking at a lot of numbers, a lot of data, a lot of shipping routes, and all kinds of things that are associated with crude to determine what the value of crude is. Personally, I think it's all a waste of time. There is no real information edge in the futures world. That is my opinion. So it's a waste of time. You're better off looking at the futures contract levels. So in other words, the order flow. You know, that's where your interest should be. But anyway, we're dropping like a stone, right? When no one, you're not anxious, you're not jumping. I mean, okay, let's say you decide to short. The market's going down. Why isn't this guy shorting? You should be shorting, making money. Well, why are we not going to do that? Let's say I short here. Where does my stop go? You answer the question. I don't know. I would have to go over the I period high, and this is what so many people do who are new to trading. Is they'll get short here, they'll put a stop here, I mean, it's almost like this is a gift to the market. What you should be looking to do is wait for that confirmation. Let this thing drop out, let it hit a key level, let it start reversing back over this liquidity low, right, back into 71.08, then you trigger the long. Now, if anyone has spent any length of time watching a dome, a level 2 dome, depth of market, you'll be able to see so you will see at times the contracts bid lower, right? And they might hit a block of orders, like a stack, right? And that's a real stack, and it hits them, they can't take out the bids, all right? So they can't hit those bids, clean them out completely, and then they reverse, right? So you would see the big contract clips coming in, right? You know, maybe 5,000 contracts accrue, you know, 10,000, then it will reverse, right? And it will hold, and then you will start to see more clips on the offer, bigger ones, right? And it gets really chunky. That's all those traders are doing, right? Is the stops have been triggered. That's why you got those big clips when the market hit on the bid. So those are the stops being ripped up, and then you get the traders reacting off the back of that, you know, now offering, because now they're getting aggressive, so they're hitting market 5,000, 10,000, just getting all in on this, right? Because they know that once those stops have been cleaned out, someone's got big liquidity, right? So so if you were trying to get long down here, you're gonna need sellers, and that's what those sell stops did for you, right? People are trying to get short sell stops, forced guys, right? So guys who got long at the wrong time, all of these people, they're gonna get forced out of the trade now. And that becomes a buying opportunity, and that's why so many people want to get involved off the back of it. Now, getting into these kind of trades, it's not great, right? Yeah, it's going down, so what? Things go up and down all the time. What you want to be able to do is capitalize on efficient pricing. Well, if you ran a Fibonacci tool from top to bottom, and then you took the 88% to 90% retracement type levels, that's what you're doing. You're buying a discount, right, in preparation to sell at a premium price. Now, what good is it going to be to you if you're selling here, or you're chasing a 5-minute chart to find selling opportunities in a market that ultimately is going to give you a better buying opportunity? Think about it. To my next video, guys. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Ha 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 ha!